So you want to become a business loan broker. Most people assume that there's a big wall you need to climb in order to enter the finance industry. They assume that they need a license, a finance degree, or years inside a bank before anyone is going to take them seriously. But you don't need those things. None of that is actually a barrier. Brokering is actually a craft that you learn. It's a business that you build. And there's a clear, repeatable path to doing these things. There's 6 steps. And by the end of this video, you'll know all 6, and you'll know what each of those actually means in practice. And 2026 is a real moment to start. And here's why. Coming off of a long stretch of high rates, banks have gotten narrower and pickier about what they'll fund. At the same time, there's a huge wall of commercial debt that's coming due and needs refinance. According to the Mortgage Bankers Association, roughly $875 billion in commercial and multifamily mortgage debt is scheduled to mature in 2026. That's about 17% of the roughly $5 trillion of outstanding debt. And when that debt matures, it needs to be repaid or refinanced. But the market has changed, and a lot of these borrowers can't just walk back into their old bank and get a yes on a refinancing application. Banks are more stringent these days. So these business owners and real estate investors need someone who can actually find the right lender for them and can actually place the deal and get it funded. And that is the opening that you step into. Now, that's the market backdrop right now. It tells you the demand is real and it's structural in the way our economy works. And this demand is where we work every single day. I'm Shane Walton, co-founder of the Commercial Loan Broker Institute. We've launched and support more than 400 commercial loan brokerages around the country. And our brokers have placed well over $2 billion in funding. So when I lay out these 6 steps in this video, it isn't theory. It's the same path we walk new brokers down every day, from knowing nothing to placing real deals and getting real commission. So let's get into it. Step 1. Step 1 is to learn how to broker. I want to be precise here because this is where beginners can get it backwards. Step 1 is not memorizing a list of loan products. It's learning the craft. What does that actually mean? Well, it certainly means understanding the major loan types: commercial real estate, mortgages and bridge loans, construction financing, SBA loans, equipment financing, working capital lines of credit. But it also means learning how lenders actually think, what fits inside their credit box, and what is going to get an instant no from them. It means knowing how to sit down with the borrower and interview them and diagnose what they truly need, which is often not what they walked in asking you for. And it means being able to package and to position a deal so that a lender can say yes very quickly. So here's the key idea behind that. Product knowledge alone doesn't make you a broker. Knowing what to do with it does. And that's exactly why our 5-phase education program at CLBI works in the way it does. To take a complete newcomer into the industry and to bring them up as a competent broker. And once you have that understanding, it's time to turn it into a real business. That's step 2. Step 2 is standing up the business and the brand. There are 2 layers here. The first layer is the plumbing, the operations behind the scene that's important to keep it working. You form the entity, you get your EIN number, and you handle the legal and the contracting side. You make sure your broker agreements are in place, your fee agreements, your engagement and disclosure documents, and you get the licensing question right as well. And here's the realistic picture on licensing. Business and commercial loan brokering generally is not state licensed the way residential mortgage origination actually is state licensed. But those rules vary state by state, and there are some real exceptions. California is the one that most people point to. So check your own state before you start. That's the plumbing. It's necessary, but it's invisible and works behind the scenes. And it won't be the reason that any borrower actually picks you and your brokerage. What actually moves the needle early on is the second layer here, your brand, how you show up in the market, your logo, your website, your business cards, your brochures, your pitch decks, your social media profiles. That's what a borrower sizes you up on before they ever decide whether they're going to trust you with their financing needs. And CLBI stands all of this up with you, right? The entity, the logo, printed business cards, your website, social profiles, your contracts, the pitch decks you'll walk into meetings with. But a skill set and a sharp brand still need somewhere to send the deal. And that's exactly where most people trying to do this on their own hit a wall. That's step 3. Step 3 is getting access to lenders. You can be a skilled broker with a great brand, but if you have nowhere to actually place a deal, none of that matters. You need real relationships with a range of lenders. Banks and credit unions, SBA lenders, equipment financiers, fast-growing world of non-bank and private credit. And it's not just having a list of names, of course. It's knowing each lender's appetite and their credit box, so you can send a deal where it's actually likely to fund instead of just spraying it everywhere and burning your credibility along the way. And this is the step DIY brokers most underestimate. Realistically, many lenders are wary of an unknown broker who has no track record. And without lender access, the craft and the knowledge and the brand have nowhere to go. This is one of the biggest reasons brokers come to us. CLBI gives you access to our own active lender network. There's hundreds of lenders that brokers around the country are using to place deals daily. So you've got the skills, you've got the brand, you've got the lenders now. So next, you need to find a way to actually run those deals without dropping them. And that's step 4. Step 4 is building your deal flow system. This is the machine that carries every deal from first contact all the way through to funding without anything slipping through the cracks. It captures the borrower's information, collects the financials and the documents that lenders require, packages a clean submission, and then sends it to the right lenders and tracks the status and follows up until it closes. Here's why this is all so important. The system, plus the documents and the checklists behind it, that is what lets you run many deals at once instead of dropping balls as soon as you have a couple active clients. One deal you can do on memory. 15 deals at different stages in your pipeline, that's where a system separates a real business from a hobbyist. And that's why CLBI gives you a CRM with online applications built right into your website that feed your borrower data straight into your pipeline, plus the contracts, the loan documentation checklist, all of the SOPs to run a new business. So now you've got a business that can take a deal and carry it to closing. There's just one thing missing, the deals themselves. So let's fix that. Step 5 is generating your first borrowers, because deals don't just show up by accident, you generate them. And for a lot of brokers, the earliest source of deal flow is referral relationships. The professionals who already work with business owners and real estate investors. Think of commercial real estate agents, brokers, CPAs and accountants, attorneys, business brokers, financial advisors, and even the bankers who have to turn deals down on a daily basis. Those people are already having conversations with your ideal clients, and they are going to uncover financing needs. So they are perfectly positioned to send you qualified borrowers again and again and again, which is what makes referrals so powerful. But beyond referrals, you've got a range of different ways to reach borrowers. There's direct outreach, email or phone. There's social media and direct messaging on LinkedIn or other platforms, or you can reach out in person at networking events where you are building the relationships face-to-face. There's paid advertising, there's online, there's offline ads, business publications, sponsorships with local chambers of commerce and industry associations. You don't have to work every channel at once, and you shouldn't try to. The goal is to build a pipeline that feeds you deal month after month, not a one-time push that's going to dry up. And that's why CLBI builds monthly marketing into most of our launch programs with daily social media posting, email marketing multiple times every month, and a whole lot more. So you're not starting that lead generation engine from scratch, which brings everything together. Step 6, where you place your first deal and you get paid. Right? Step 6 is working deals. You take a borrower that you've generated, you package that deal using your systems and SOPs, you submit it to the right lender network that you built back in step 3, and you manage it through underwriting to a funded close. And when it funds, you get paid. And here's how that works. You earn points on the loan amount. Depending on the loan type, that's anywhere from 1% to 10%. So your upside is going to scale with the size of the deal and the type of product that you're working. Let me show you how that actually looks with some illustrative deals, just to quickly make that math concrete. Say you place a conventional commercial real estate loan of $2 million at 1%. That's $20,000 commission on that deal. And say it's got another one, equipment financing for $500,000. I'll say that's at 4% commission. Again, that's going to still equal out to $20,000 in commission on that second deal. Different deal, different commission rate, different loan amount, same commission. Or let's take working capital, $300,000 at 5%. That's a $15,000 commission check. So what you actually earn varies by deal, lender, and loan type. But you can see that the pattern is consistent. A single deal can put 4 or 5 figures in your pocket. And this is income per deal, not per hour or salary. And as your first deal closing, that does something bigger than just giving you a check, right? That's really the proof of this business to yourself that the model works. On that first deal and everyone after it, CLBI is in it with you. We provide support and coaching and mentoring on the deals as you're placing them. So that's the path. You learn the craft, you stand up the business entity and brand, you get lender access, you build your system for handling deals, you generate borrowers, and you place that first deal and work it through to funding. There's 6 steps, and now you know what each one of them actually involves. If you want those 6 steps expanded into the granular version of a list of actions to execute, we put together a step-by-step brokerage launch checklist. It's over 100 steps covering every part of setting up a brokerage, pulled straight from the process that we've used to launch hundreds of them. This checklist used to be client only, but right now it's free for anybody who's exploring the industry, and the download link is below. So grab it before you do anything else so that you're working from the full map instead of guessing your way. And once you've got the steps down, the next question is, well, what does the work actually feel like day to day? So I made a video on exactly that. A day in the life of a commercial loan broker. And it's the perfect next watch. So get out there, give big to your clients and your lenders, and let's make this world a better place together. I'll see you in the next one.